Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, January 4th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start, of course, with the big picture, work our way into the day itself. If you've been following the daily Tesla report for the last few weeks, the last month or two, actually, you know that this was an anticipated area of resistance and one, I'm talking 259.38, this descending channel top weekly chart comes off that July high, a 6-month channel top that we'd mentioned could contain buying not only through January, but possibly through all of the first quarter. Because once you test the channel top, you cannot discount the possibility for falling to the channel bottom. That is just sort of the way channel dynamics work. And so I consider that 180.70 channel bottom and dropping weekly as a possible 2 to 3 to 5 month downside objective. And I've been mentioning you can position yourself for that. Once we test the upper 250s, which we did last week, you could perhaps reach for 175, 180 out of the money puts that don't expire for at least 6 months, maybe a year out, just to preserve delta and reduce your theta time decay element. And that is still the big picture, so long as we continue placing weekly settlements at or below 259.38. Now, the same formation on the daily chart comes in at 257.33. And when we closed above it about a week ago, I'd mentioned we really, not so fast. We need to see how the week close out. We do need to close. These longer-term buy signals are not reliable, if you will, or official, if you will, unless you close above them. I like any 6-month line study. If it's a significant textbook formation like this channel top is, I like to give it the 1% margin of reliability. In other words, it would be a settlement this week, for instance, tomorrow, not going to happen, at 261.97 or higher, which is 1% beyond 259.38, that then would set off a 3 to 5 month buy signal up to the 350.78 channel top. But that's not what's happening. Right now, we're in the process of falling away. And obviously, the big question is, will we actually test 180.70? And I just won't discount it as a longer term possibility. Now, there are these targets that we've had all along. Following the testing of the low 260s, upper 250s a week ago, I'd mentioned how the 236.87 channel bottom is considered a 1 to 2 week target. We tested that on Wednesday. Are we going to bounce back into the upper 250s from here? We very well may. And that is, I'm speaking now to 3 to 5 day swing traders. I consider 236.87 really kind of a 3 to 5 day swing trade pivot point, above which the upper 250s in reach by the end of next week or sooner, and below which the lower 220s in reach within 3 to 5 days. This could be a 1 to 2 day event, by the way. In other words, if we close today below 236.87, with this kind of volatility, we could quite easily fall into the low 220s by Friday's close, where I might add we find not only an extreme channel bottom, but also a rising 2/3 speed line in the same vicinity, well suited to absorb selling through January into February, and from here within 2 to 3 weeks, we could rally back into the significant zone of resistance between 257.33 and 259.38. And while I'm at it, I'd mentioned how there's a channel bottom down here in the low 180s and dropping that is considered a possible 3 to 5 month target. It becomes a clear 3 to 5 week objective if we were to close over the next week or two below this 220.17 to 221.31 rising band of channel and speed line support. Respectable support. So let's go into the day itself, that in the event we happen to break or open below 236.87, 229.60 is likely. Nothing more than a 50% downside retracement from that late October low against the more recent high from a week ago. That could be it for the day. And once again, though, if we close today below 236.87, I do expect within 3 to 5 days or sooner, possibly by tomorrow's close, this 220.17 to 221.31 region. If you've been playing the short side, if you're short still from the upper 250s, low 260s from last week, holding out for the low 220s, as I mentioned, as a 3 to 5 week target, that could be within 2 weeks of testing this upper area. This is your zone, the low 220s, 220.17 to 221.31. That is a good area to cover short positions and consider reversing and going long if you're a typical, anywhere from a 1 to 2 week to 3 to 5 week swing trader. Because from here we can rally right back into the upper 250s, low 260s within 2 to 3 weeks of testing 220.17 to 221.31. If we close below 220.17 once again, I would expect the channel bottom that is on the weekly chart at 180.70 as shown earlier at the top of the video. And we'll be dialing this in very closely as the days and weeks follow a settlement below 220.17. Until then, this is your bottom picking territory through the rest of January. I think it's about as simple as that. Now, upside today, I will also mention that where is my chart? There it is. So, we've got this rising 1/3 speed line. And we've got 236.87 as our channel bottom. 236.87 able to contain selling into next week. And from here, we can rally back into the upper 250s, as I say, by the end of next week. Upside today, we've reduced the 246. Sorry about that. We've reduced the 246.21 speed line to an intraday resistance only, not a session containment. Because of the significant sell-off we've seen over the last 4 or 5 days, we could spring back significantly. So I don't want to encourage aggressive selling. And by that I mean, I'll let you determine what I mean by that. But I just think you need to trade light and nimble at 246.21. I think it's well suited for aggressive day traders, especially if you see other things on, say, a 5 or 30-minute bar chart, and you're bound to with all the series of highs and lows that have occurred in the same vicinity over the last month or so. But 246.21, I'm going to call it a soft intraday pivot point, below which 236.87 remains in constant intraday reach. And if we push through 246.21, we could short cover our way all the way back to 257.33 by the closing bell. I do think the likelier outcome would be a settlement above 246.21, likely to yield 257.33 tomorrow. This channel top, more properly shown, I think, on the weekly chart at 259.38, because you don't see a settlement above this weekly chart, where you did see a settlement for 1 day only above the same channel top on the daily chart. So once again, this area, 259.38, able to contain buying through January and possibly the balance of the first quarter. And if over the next couple of weeks, week or two, we can close above 259.38 by a 1% margin, long-term buy signal the following 2 to 3 weeks, likely to push into the mid 280s, where we could top out on a weekly, possibly monthly basis, fall back into the upper 250s. We could fill that widening wedge out, as I've said before, for 3 to 5 weeks. But really, overall, closing above the 259.38 channel top, I will then hold to a 350.78 longer-term target that I think realistically could be a 3 to 5 month move. It could also take a little longer depending on volatility. It could take into the middle of the year, into the third quarter perhaps, depending on facts on the ground and how things play out on the way up. I think that pretty much summarizes it. I'm going to leave you with this image for the day. This is pretty solid image to leave you with. I've already described it. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow, of course, with Friday's Tesla. You have a great day.